Hi, everyone. Welcome to another coffee chat with CastleHill. Today, I'm joined by Richard Pike, CEO of Governor Software. Richard, if you wouldn't mind, maybe just a little bit of background about yourself and Governor.
Sure. Thank you, Tim. So, yeah, I'm CEO and founder of Governor Software. I'm also a non executive director and chairman of a number of financial services firms. So, particularly chairman of Citadel Securities in Europe and Citadel Securities in the UK. I'm on the board of FBD, which is the largest domestic insurer here in Ireland. And I'm also on the board of Starling International, which is a neobank in the UK and now going for a license here in Ireland. And so my background is in risk and compliance of financial services. And that's how and why I founded Governor Software to help with that process.
It's one of my favorite tools. We get to always good to show. So thanks for joining again from Dublin, midday for you. But a couple things I want to talk about today, and the overall theme of the discussion is going to be around operational resiliency. Right, a very important topic. We've had a couple of podcasts similar in this theme around the pandemic and how it's impacted different areas here. But just as we were talking, and you mentioned the paper that you did, really appreciated some of the insights that you gained, and just want to get some of those out for our audience. So the first piece is maybe let's just talk a little bit about the regulatory environment. So I know there's a lot of changes coming through Europe, and they're now interacting with the Fed and being more collaborative so that we have a consistent framework across the space. So what's happening there?
Yeah, so look, this was all started actually pre-pandemic. So back in 2019, the BOE, Bank of England, issued a paper um, around operational resilience. It was the first time a lot of us had heard this. And really it's because in the UK particularly, they had some problems with some major banks failing for periods of weeks, particularly NatWest, RBS. Another case like that, they obviously saw the flash crash and they realized that having capital for operational risk really didn't help. Number one, the consumers, and number two, the market, if you're, in terms of other players in the market. And so they became more concerned about how would firms manage that resilience in terms of providing services to the market or providing services to their customers, and that was equally or more important than just having capital to cover operational risk. So they've issued a number of papers that they've now issued some guidelines and rules, which are coming into place in the UK. The EC followed that with a consultation paper in 2019. The BIS in Basel in 2020 issued a principles document, and the Fed, OCI, and FDIC issued a joint document in October 2020 around sound practices. And in a number of those areas, there's nothing new, and the Fed document says that, but it really pulls together a lot of individual underlying pieces of guidelines and makes the focus much more on the customer and the service that you're providing rather than the internal discussion. So yeah, the regulators are looking at this very, very hard.
And that's what we've been seeing as well with some of our customer situations. Just that there's really this change to a different perspective that than what was there before. So you mentioned the Basel Accord, right? So the seven principles that they put out. To your point, several of them are the same, right? They're not officially different from anything what you're supposed to be doing from an operational risk perspective, but the focus on them are there. So just to run through the seven, right? So governance, business continuity, planning and testing, mapping connections and dependencies of critical operations, and I'm paraphrasing, of course, the incident management, third-party dependency management, operational risk management, and the resilient information and communication technology, including cybersecurity. So I look at that list and the ones that, so governance, we were supposed to have governance in place from a business continuity perspective. We were supposed to have the business continuity planning and testing as a separate entity in most firms, right? In many cases, separate from the disaster recovery side as well, which has always been a little mystifying to me. But then mapping the connections and dependencies. But really, when you get down into, I think, that incident management, the third party and operational risk management, where you're supposed to be linking all of these things together back to that customer view. And is that really as called out as seriously as it feels?
Yeah, it's very much. I mean, when we talk to firms, and I talk to firms in the UK who've done this because the regulator's on this already. Um, the hard part is understanding, number one, what are our key and critical services out to the market, be it customers or other market participants, and then tracking those all the way back through processes, systems, third parties, and keeping that real time. You know what I mean? And so that if something blows up, what customers and services are affected. I think one of the problems they had in the NatWest RBS case was they didn't actually know what services were up and what were down. So they couldn't communicate reasonably with their customers to say, this won't work, this does work, and so on. So that really clear understanding of all the pieces of the chain is difficult for firms. Um, and then having an understanding of, well, what could happen to that chain? And if it does, how do I communicate that correctly and fix it as quickly as possible? So it's a real challenge, and it's definitely this outside in view is what the regulator wants. If you're out of the market, let's say, and you're providing liquidity to the market, same idea. Why are you out of the market? What markets are you out of? When will you get back? How do you communicate that information? That sort of stuff. It's a very, very much an outside in view.
Yeah, we had the recent example of Robinhood having those sort of challenges, right? With those sort of things of people were accusing them of improper behavior, where really they were just adhering to their contractual obligations, but the perception of that as a failure is very different than the reality of things and how they were there. So
Yeah. And the regulator, you can see why the regulator is doing it, because the regulator is getting kicked. And if they're just saying, well, Robinhood still has enough capital to maintain, that doesn't really help the regulator either with the public perception. They're supposed to be on this where they get affected. So you can understand why they've changed slightly as well.
you made a reference to one part of the papers that I found interesting, which is the aspect that it's about ongoing monitoring, right? So everybody's business continuity or disaster recovery plan says once a year we're going to go and test this, or once a quarter, or something along those lines, right? That's not sufficient when you're looking at it from a customer perspective.
Correct. And so what there's a lot of push now on is scenario generation and scenario testing. So what they're saying is you should create scenarios based on what you see in the rest of the world. So if your bank in India gets hit by something, you should have that in the pot, so to speak, and understand what's going on, be it cyber, pandemic, other things, and your own information. And then these scenarios should be matched to those critical services. So for each services, you have a number of scenarios. And then you run those scenarios each year and make sure that you can recover in the right period of time within your what's called an impact tolerance, and you have your communications correct and all that sort of stuff. So, I'll give you an example of a very real one we were in with a liquidity scenario we ran, a failure of liquidity systems. And when we sat down day one, there was a 200-page printed document about what we're supposed to do. Well, that doesn't work, right? When you're in a stress situation. So, job number one was turn that into a 2-page glossy, right? So we can actually read it. So running these scenarios in the real world, so as close to the real world as you can, is now a real push, hard push from the regulator.
Yeah, and the business services view is also a subtle difference from just identifying all of your critical processes. I know in our world we see a lot of places that have a separate system for their disaster recovery or business continuity planning activities, and they lose the connection to the corporate process view, right? If there is one, if the process hierarchy or even organizational hierarchy in many cases, because they're focused on do I have enough telephones on desks and fun things like that, right? The traditional view of that overall. The this view of saying let's talk about it from a business service perspective, I think is also helping to abstract it away from that aspect of it. We've been living in a disaster recovery situation for over a year, right? And now it's the new normal or not, but people still need to be able to go back and figure out what it was there.
Correct. Yeah, and this really is what's different about this one is holistic. So it's people will have legal entity views, process views, third party views, like you say, but this one really is by business service, and you need to include the people who are using Excel, the IT system, the third party, all those bits in the chain, and understand exactly where they are. The other difference in the UK, and it's probably coming to other places, is they're actually demanding an impact tolerance. They're demanding that the board decide, I can handle 4 hours outage for consumer payments or a week outage for, statements, let's say. And then you have to use that business service view to make sure you can hit that. So if in the middle of that, there's some process that takes a week and you have to get it back up and running in a day, you have to spend the money and fix it basically. So it's not just knowing the process, but understanding how it fails and how you can get it back up and running and how long that takes. So that's UK specific. But I think what will probably happen, we're seeing a little bit of this in some other regulators, is they don't put that in law, but that's kind of what they're looking for. You know what I mean? They're saying, well, show me that you're doing a little bit more here.
Yeah, it's a very different perspective than the traditional RPO or RTO for a particular technology or other process from that perspective. How do you think those are going to evolve? I mean, what's the new buzzword we're going to have?
It'll be some, yeah, I don't know what the buzzword is going to be. But certainly I think you will see, at the top of the house anyway in the banks, much more focus on these critical services, and a constant checking by the risk committee or whoever, are we can we hit those numbers? And I think you might even, depending on how certain firms, I think you might see some people get out of some markets, to be honest, and into others, based on the fact that they can't respond quick enough to the regulator requirements, if you know what I
Yep.
mean. So if you're in a service that requires, backup within an hour, and you've got to spend to have redundant systems to do that, you might just decide that's just too expensive. So I think we might see even a little bit more sort of positioning in terms of markets, depending on some of this.
And you alluded to it just there, right? And one of my favorite topics when talking about governor is the governance aspect of this is quite different, right? And we just did a podcast a few days ago or a few weeks ago about how in the OCC or the Fed in the U.S. is really putting higher expectations on the board of directors. This is just another place where the board of directors are going to have that level of scrutiny. Is the information good enough coming to them?
No, at the moment, the problem is it's coming from, the op risk guys who look at maybe process based, by legal entity view, yeah.
Yep.
And there isn't this, and a separate BCP, as you said, or BCM document. So this is really a joined up view. And so in my mind, there may not be a huge amount more work to do per se. It's joining the dots is what really has been missing. So the key with this is all that real clear line of sight into each critical process and running the scenarios and seeing how that works. So I wouldn't be going out to build a whole new team in the corner to do this on their own. And in fact, interesting enough, one of the firms who've done it in the UK that I talked to, they started off by basically building a team, and then they realized very quickly that team was using other people in all the other bits we talked about: resolution planning, recovery, BCP, op risk. And they ended up starting again, shrinking the team back down, but bringing in folks from those other teams, so making it much more cooperative. And they used that as an opportunity actually to take all those libraries of processes, third parties, etc., and build one core library set. Yeah, because they realized again the key thing here is you're constantly going to be updating this, right? And so you need one core business process view that might include legal entity view, risk view, whatever, yeah, IT systems view. But you need some way to manage this. So that's really what I'm seeing in firms doing this: is centralized teams that just have groups from others, don't reinvent the wheel, but do build a really clear process view, or sorry, business service view of your critical services.
Quickly it comes back down to data, right? At the end of the day, and being able to surface that information across those areas, which is often challenging from the traditional systems that are there, whether it's your third party management or your business continuity planning or disaster recovery systems that are there, which tend to be very siloed because of the specialized
Correct.
nature of them. Interesting.
Exactly correct. Yeah.
Have you heard anything or see anything about potential customer participation in these exercises or scenarios?
No, but you do need. So what we're seeing in the UK a little bit again, because they're a bit ahead of the game. What they are bringing the customer in on is actually this link to, and it's important now, to vulnerable customers. So if you're saying I'm willing for have my current account system, let's say, down for a week, that's what I'm okay with. You might get a cohort of vulnerable customers saying that I can't eat or whatever, I can't pay for my heating if my, yeah.
Yep.
And so that realization has moved the bar a little bit because you're getting challenged by different sorts of cohorts of customers. So what they realize in that cases is we really need to know our customer better in the different types, and almost break those business services out by customer type. So we don't take this broad view and say, oh, we don't care if it's down for a week, and then suddenly, oh, a hell breaks loose from this corner of customers. So it is driving a better understanding of what are our different cohorts of customers and how do they react to these failures. Now, whether you get them in and to do that, that's kind of different folks, different approaches. But you definitely do need to understand them better to do this right.
So it's beyond just that. That's where the operational risk aspect of the principle starts to come into play, right? You are stretching across non-traditional boundaries to get some of this
Yeah,
information, right?
Correct.
know your customer.
Correct. You need to go to your marketing team and find out how do they, what do our customers look like? How much do they use services? So is there a bunch that we don't think of, but actually they use this service a lot more, and therefore that's actually more critical than we thought it was. So understanding the criticality, it's got to be customer focused or market focused. To say if you're a market player, even if you're a algo trading firm, let's say, with no customers per se, same requirements will be in. Well, if you can't keep in that market, you may think it's a tiny market for you, but you may be doing 10% of that of the volume on that market. So it's critical for them.
Yep.
So it's a critical to them, not critical for you, is the thinking
Yep.
here.
Yeah. Third and fourth party dependencies become a lot more interesting in this case, especially where some of those markets would be served more as an exploration of services as opposed to maybe a core business. We see that a lot with firms. So just they're on the edge of what they're trying to do, and that's where that stuff's coming from. So
Correct. Yeah, and that's what I said earlier. People may decide to stay out of or get into even markets depending on their ability to hit these numbers and be resilient, because I think it's going to be more and more important.
it's very interesting overall. So the impact categories as well, right? It's not just the financial impact as we've talked about. It's going to be that customer impact overall. When we think about cybersecurity type incidents or the communications technology, sort of the traditional technology and communication side of it, is there anything that they're re-looking at in this case, or is that all just that whole bucket of worms that they have to?
A little bit that. I mean, it's interesting is that the original idea for this actually came from the cyber world, because the cyber world, anyone who's done cyber risk work realizes that in the cyber world, they don't think about if something's going to happen. They actually think when it's going to happen. And it was that kind of mindset that gave the Bank of England the idea to change. And that's really the idea is don't think of this as this is something that might happen in a very unlikely case. You've got to think about, right, when this happens, what happens? So it is definitely a cyber risk mindset, but cyber in this game is just part of the problem. Now it's a large part of the problem, but it's more how do we think about the thing holistically, not just as cyber risk. So some of those skill sets and ideas, but it's very much not the idea. It's just to be cyber. It's to broaden it out to resilient.
Mapping connections and dependencies across these areas, right? That's one of the strengths of the software that you have, right? It's part of why you built Governor overall. Is there a push in that direction from people looking to bring that type of information together for this purpose overall?
Yeah, it's definitely. So when you sit down and map some of these business services, you get a network of complexity, right? So your traditional Excel strategy is going to fall over pretty soon, right? Because it can't handle the multidimensional, and the fact that you may be linking to an IT system or a legal entity or a third party or a process done by a person on a desk. So that ability to be flexible yet hold those connections, yeah, and draw effectively a map of how these services work um, is vital. And so that you're right, that's what Governor is designed to do, to give you a map that you can draw and then allocate responsibilities to different, okay, we now know that third party's in this area, in this service. So Fred, you need to be in charge of that third party to keep that going. Off you go. Yeah, here's an IT system, right? Mary, you need to be in charge of that. So that ability to draw it out, but then allocate responsibility and accountability is a key benefit of Governor, but it is a key requirement in this business case.
Incident management also seems, just back to sort of the different principles and ticking them off, right? Incident management also becomes more interesting in this case, and we've talked about it in the other pandemic focused podcasts about the fact that we're living through a long term incident, as opposed to, like you said, like a cyber incident, which may be 15 seconds or maybe 2 days or something along those lines. And so, is the incident management side of this also?
Yeah, huge. So one of the particularly actually interesting enough in the EU paper, consultation paper, because what they saw as incidents there's a couple of flavors there. So number one, a big incident, you need to be able to manage that in the holistic sense of communication out as well. So people, quite obviously, firms are quite good at managing, let's say, BCP, but then they forget about the fact they got to tell the customers or tell the regulators or tell the partners about this incident. So they were sort of saying you've got to be really good at communications around incident management. But secondly, they realized that a lot of small incidents end up being big incidents, if you know what I mean. So if you don't do them properly, you get a bigger problem. or if you'd even been able to communicate to people, oh, by the way, we will be down next Sunday. You know what I mean? And manage people. So that was the two sides they brought out, that you need to have a really good, clear incident communication process, but also you need to have something that sort of flags small things up, so somebody can say, hang on a second, whoa, that's a, that needs to raise the game. We need to raise the game on this one. And part of the, some firms are very good at this, but part of the other problem is having holistic incident management, right? So they'll have consumer incident management, they'll have back end services, IT, they might have compliance related incident management, right? And they got loads of different people and processes and systems. And again, all these papers say you need some sort, even if they're underlying different systems of people, you need some way of collating these things into one kind of large incident plan. So that's a big area of focus.
And using that information and as part of your scenario analysis, I'm sure is what they're going to be testing
Correct.
for, right?
Yeah, yeah. You got a nice 360 loop to say we had this 2 years ago. This is what would happen now.
Yep.
Correct.
Awesome.
And other people's incidents. So the other thing they're saying is you got to be online watching for other things that happen and are in the press or in regulatory feeds or whatever, to say, hang on, I need to test that here. What would happen if? Yeah.
Yep.
So things like the ORX, for instance, operational risk database might be useful. Anything that you can find to get information about how these incidents are occurring elsewhere.
This has been really interesting, Richard. So I think it's a great conversation. What would you leave people with? What's the key thing that they really need to be thinking about relative to this?
I think you need to be clear and have a way of defining these business or critical business services. That's the core. And two, I wouldn't build a whole other team in a corner. That you'll end up with double and triple the cost. You can do it with the folks you have, maybe one or two extra who know their stuff, but building that list of services and their interconnections and links is vital.
Awesome. Thank you so much for joining me. I hope you have a great day
Thank
and
you,
stay
Tim.
safe.
Yeah, thank you.
Thank you.
Cheers.